No matter on whatever basis I take a trade, it first hits my stop loss. Even though I trade based on support, resistance, charts, patterns, price action, all these technical things, it pushes me out of the market. My stop loss is hit, I'm in loss, and then the market goes to the target. But when it happens frequently, like 7 out of 10 times when this continuously happens, being a trader, our work is to identify what works for us, practice it, backtest it, learn it, and then implement it in the market, right? In this video, we are going to learn about stop loss hunting moves. There are few places in the market, for example, the previous high or the previous low, where majorly the traps are there. Okay, so what are the places that frequently there are traps? So that once you understood where and all there are traps, we can stay away. So we'll get into the charts and we will see things in detail after the intro. In order to understand, let's say if I have to place 500 buy orders, okay, there should be 500 sell orders also happening. Only then I will be able to execute this order. Let's say there was no 500 orders, there's only 2 orders that has been sold. So I do not have enough liquidity for my trade to be executed. See, all these big players in the market, FIIs, DIIs, banks, and all the big people who have big money, when they are playing, they're not gonna trade like us in like 500 or 100 quantities, right? They're gonna trade with might be 10,000 or lakh quantities. So in order for their orders to be executed, okay, all these 1 lakh orders to be executed, they need liquidity in the market. 4 things are very important when it comes to predicting the market for tomorrow. Let's say now I want to do a pre-analysis. I want to understand tomorrow's level, where the market can play. The first thing that I'm going to do is plot the market structure, in which trend the market is, where. The next thing that I do in the smaller time frame is I take the previous day's high and low. This plays a very major role because that's the maximum the price has gone to and the minimum the sellers have taken down. So this is the area where a lot of orders got triggered, or the climax change wherein buyers to sellers, all these things happened here. But this is where there is a lot of traps that's happening. Let me explain. So here, this is the high the market has made, okay, and then the price came down. So next time when the market goes up near this resistance, usually there'll be 1 or 2 candles close around this area, okay, and soon after that the price will start falling. Okay, it will sweep all the liquidity, all the sell orders, all the new buyers and everyone, and the price will start coming down. Okay, and the same goes with the low as well. Okay, the second example also it is the same. So in the third example, if you see here the market went up, okay, then it came down. So the price is here near the double top. Okay, this is the double top, right? So here the it is taken away the seller stop loss along with the buyer stop loss. So who has made money here, sellers or buyers? None of us made money, but rather the people who are trading with liquidity or these concepts are making money here. So the next here you can see, yeah, so in this previous thing we saw, this is the low, this is the high, this is where the liquidity was. The liquidity gets shifted from this low to this area, okay, and the price goes up. Okay, this is the previous high, it trapped both buyers and sellers here and then started coming down. Okay, when this breaks, what we do, we usually think there is a neckline break, this is a double top, and we most likely go and take a sell here. So what happens after you take a sell, the market starts going up again. So this is how usually we get trapped. And the other similar way is equal lows. So 3-4 times when the market takes one particular area as a support and starts going up, what we do, we usually draw a zone or an area and wait for the price to come down to that level so we can initiate a trade, right? So you can see what happens here. We enter after the breakout, okay, and then all our orders are here. Then buyers stop loss is being hit, sellers are entering here, both are trapped, right? Then after trapping both of them, the market starts going up. Okay, the next one again is a trend line. The price has been in an uptrend. It's been making higher highs and higher lows. Connecting the lows, we have a trend line. Okay. Then either at this pullback or at this pullback or at the third pullback, you can see the market reverse. Right, so these are the major areas where your stop loss is being hit. We'll see few more examples. You can see price went up to this high, then had its rejection, started coming down. Second time it has gone here, we have a trend line. Okay, so this is the previous high level that we have. So when a candle breaks out like this and when there is a candle close like this, what we usually tend to do is we think there is a lot of buy orders here and there's a good volume and the market is going to go up. We even take the risk of this big candle. We might place our stop loss below this and we might take our entry here. Soon after that, you can see what has happened. And yeah, in this example, you can see we have a trend line, right? It is having like 2-3 touches here and then there is a breakout. Okay, so what we do, we enter at the breakout candle, we place our stop loss above that and we wait for a trade here. What happens? You can see this is what happens. 1 or 2 candles after that and very soon after that, this is the previous low, right? It just swept this liquidity and soon after that it started going up. So from the technical perspective it is all fine, but this is something that has to do with the logical part. In this example again, you can see here we have a range. Okay, like I said, it is in a particular area, resistance, support, and then there is a breakout. Okay, and then you can see one candle, soon after that it just goes up again. If you have a question, okay, if this is the places where they are getting trapped, how will I be trading? If the technical things whatever I learned so many days are not working and if something else is working now, should I implement that? Should I get to that? If you have such a question, we also have to understand that when the market updates itself, so should we. If you are so serious in this game that I have no other option left, I have to make this right. I don't care what it takes from me. I will learn, I will practice. Whatever new things come up, whatever works, I am going to try new things. Is who's going to make it up, right? So it's not like only technical analysis, only price action can take you somewhere, or only the psychology and the liquidity concepts can take you anywhere. You need both in order to survive in the market. First step is to not get trapped. The second step is to identify how I can take entry related things. This video is about, how they trap, in what places they trap. Entry related things will need a lot more videos because it cannot be covered in 1-2 videos. So what I can do is I can create a playlist and add all the basic things like chalk, break of structure, inducement, and all these basic terms. I can start adding it in a playlist. The later parts we can slowly, step by step, we can learn things in that way. Okay, just let me know in the comments if you would like to see all these things so I can make videos on that. So yeah, that's it. Please do hit like and subscribe because it really means a lot. Thank you.